Hello everyone, I am Bogdan, the co-founder of EcoHive. I am here with Mogens, which I believe we will do a very interesting podcast because I am not going to reveal anything, but I'm going to tell him to present himself. So Mogens, thank you for being here, and please
You're
let our
welcome.
audience know who you are and what you do.
Yes. Hi, everybody. So my name is Mogens Nielsen. I'm working out of Copenhagen, Denmark. I work as a business developer in the tech space. More specifically, I'm investing in and leading companies which you would call software as a service scale-ups. And currently, my portfolio, so to speak, is just under 10 companies where I am sort of semi-actively working with at the board level or more actively than that.
That's very interesting. Can you tell us your story of how did you end up here with 10 companies in your portfolio?
Yes, I can do that and interrupt me if it gets too long. But I'm an engineer by education. I have a PhD in computer science back from way back, 80s, I think it was. And then I,
Oh,
I worked for just under 10 years in the European space industry, doing software for onboard software for satellites, ground center software, etc. And after that thing, I met a serial entrepreneur from Egypt, with whom I did my first startup in the mid 90s. That was a company that was software for e-commerce. It turned out it was a bit early for that, but it was a very interesting experience. Then I've been the CEO of three other companies, all in the scale-up phase, all with focus on how to become bigger in that phase where the problems is typically internationalization, moving from one market segment to the other, etc. And I did that until around 15 years ago, where I decided to not be operational in one company anymore, but really to work in the way I do today, which is to have a portfolio of companies where I could be kind of working more actively than a typical board member, but not being the CEO and being sort of fully devoted to one company. So, and I've done that for 15 years now, and it's working out well for me. So I intend to continue with that.
okay, that's very interesting.
Mhm.
How do you divide your attention between all those companies? Then, I believe, for me, it's hard to stay focused on only one, on the only one that I have. What about 10? Like, how do you divide your energy and stuff and
Yeah,
attention?
that's a very good question. And when I started this out, my intention was to find five companies and then be one day a week in each company. That was sort of the
Okay,
original intention.
okay.
Now it has turned out to be 10. First of all, because I'm a very bad no sayer. So so I've probably taken in a company or two too much. But the essence is that I don't do real operational work, right? When I say I do business development, it's typically strategy formulation and strategy execution. But there's always, a CEO and a management team in each company who would do the day-to-day work. And that's the only way you can balance this out. And then, I have found that 10 is the upper limit to what I can do with only 24 hours a day in my calendar, and it
Okay.
means that in certain periods I use a lot of time. Right now I'm using more than half my time in one company, but then that's only for a short-term thing, and then in other periods other companies take up my time. But on average it sort of balances out, corresponding to kind of a full-time job, you would say. Yeah.
Okay, that's
Mhm.
very interesting. So basically balancing the time between all those 10. Okay, that's very
Where
interesting.
my luck is that they don't require full attention at the same time, because then it would of course be absolutely impossible.
Yeah, yeah. Okay, I think you're one of the most how do I say it? One of the most capable persons of answering the next question, which would be what are the current trends in the market in the SaaS space that you can see?
Yeah. Okay. So if I should pick out, I will take two trends which I consider really, really important, and also things which across my portfolio is coloring how we see the world, right? So the first
Okay.
one is, of course, generative AI. So in all companies I work with, generative AI is on the agenda because it's on the agenda with our customers, so to speak. And I think the thing which is important to understand today is that we are sort of beyond the hype cycle kind of thing, right? So
Yeah.
hype has been extreme. It's still very hyped, But in order to survive, you need to find applications of generative AI which really give value to your customers, right? So
Yeah.
even though you can get in the door by just by talking about generative AI. I think in the end, if you want to make them happy, you need to find applications which really help them. And the good thing is that if you are sort of in enterprise SaaS, for instance, it's always about utilizing the fact that you own some of the customer's data and you want to sort of take it from the data level into something really useful for them. So I think that's a very important trend, and I think we've only seen the start of that, I believe. I think if you know the hype cycle, the
Yeah.
thing, then
Yeah.
we are beyond the point where and we are also getting through the disillusion phase. But now we will start to see real applications providing real value, where this is just part of what you do. So
Yeah.
that would be my take on that. The second thing, and that's how should I say that that's also a challenge, I think, is that software as a service is now becoming mainstream, right?
Yeah. Yeah.
For the last 10 years, I've worked with companies where valuations have been higher than other businesses, but that seems to sort of get to an end now because everything now in software is software as a service, right? And therefore it's harder to get to really hit 50 times ARR or something like that in valuations are still good, but that's only because predictability in SaaS is very good, right? So it's not very different to other types of subscription business anymore. So I would say sort of we've gone from the early SaaS market and into the mainstream SaaS market now, and
Yeah.
for good and for bad, right?
Yeah.
For me as an investor, I think it's a challenge. You need to get realistic on valuation
Yeah. I can
expectations, right?
understand.
Yeah.
Yeah, I can understand that. I think it would be very interesting for the people that are watching the podcast right now. How does valuation works from an investor's perspective?
Yeah, that is a good question. First of all, you need now I'm only speaking about software as a service, right?
Yeah, exactly.
So the first thing is that you need to know your SaaS KPIs. I'll come back to what that is. You need to
Yeah.
be able to measure them. You need to take them out of data so they are trustworthy. And then you need some of the SaaS KPIs will decide whether you will get the SaaS multiples in value or not.
Okay.
So to be more specific, the holy grail is the MRR growth. Growth in net MRR is by far the most important
Yep.
KPI you need to monitor. And the second most important one is the net retention rate. These two will decide whether you will be valued on high SaaS multiples or lower SaaS multiples. And that is basically how it works. And of course, you can find a potential investor slash acquirer who has a strategic angle into it. And that could be even more important than sort of your financial performance in SaaS KPIs. All
Yep.
by the majority of the investor market is built from financial investors like private equity funds, venture funds, etc., etc. And these are all very focused on SaaS KPIs, and therefore that would be the departure from valuation.
Mhm.
And then always be realistic about it, because in the end it's also a lot of horse trading, of course. But I think sort of the discussion will circle around these SaaS KPIs.
What's a good multiplier or a high multiplier? You've mentioned like high multiplier, low multiplier. What's like a high one and the low one?
Yeah, so you can go into all the indexes related to large companies, etc. Then you'll find the average is 6 times, that the value is 6 times ARR, right? In the
Yeah.
good days, 3 or 4 years ago, it could go to 10, 12 times ARR, but the average is 6 times ARR. So today I would say if you get 10 times ARR, then that's a good valuation. If you get 3 times ARR, that's a not so good valuation. Just to give you sort of a range, right?
Yeah.
But again, it all depends on do you have growth in your MRR? Do you have low churn or high net retention? And then there's also another important thing called the rule of 40, which the rule of 40%. Have you ever heard about that?
No. No.
No, that's basically taking your growth rate in MRR plus your EBITDA margin. And if you sort of add those two numbers, if that becomes more than 40%, then you would typically get the high multiples.
Okay.
Whereas if you are lower than 40%, that will give you lower multiples. And it's, of course, just a rephrasing of the fact that either you grow very fast or you are profitable, right?
Yeah.
You can have a cash flow negative company with high multiples, but that means that it's ultra high growth, right? Or you can
Yeah.
have a company with lower growth with high multiples, but that's because it's very profitable, right? So it's either or, and in the best case, of course, you have good growth and good profitability.
Yeah, that's very interesting. I think this will be very valuable for people that are watching this right now. Yeah, regarding the valuation and stuff.
And just
Is
for
it?
the audience, this is
Yeah,
real. This is actually what you negotiate when you do SaaS deals, especially with financial investors, right?
that's interesting because I believe that some of our listeners will be people that have SaaSes and will try
Mhm.
to find out, other people's stories about their, maybe how they grew their SaaS, how they started their SaaS and stuff like that. So I believe this will be really valuable for them. But right now, also regarding the evaluation, is there anything that's making the current landscape more challenging for SaaS businesses?
That's a good question. I think if I should point out one, of course, you always need to follow the business cycles, right? So is it a good or a bad time right now? I think it's sort of average, right? It was a year ago was worse than now. So maybe next year is even better. But I think one thing is that right now, pure AI startups are taking up a lot of the money. And that means that for traditional is with where AI is not the headline, but just, a tool or something like that, you would have less interest from the investors because they are focusing on AI at the moment, right? And you would also, if you look at again, if you look about statistics about where the money are going, it's going into AI. That's a challenge. If you can have a very good value prop as a software as a service company. You might use AI, but if it's not the headline, then you might
Yeah.
miss out on something these days.
So it's very hard to get like investment if you're not having the headline as AI, right?
Yeah, I mean, there are still investors who is not completely focused on AI. It's just a smaller part of the full market than it was early on.
Yeah,
Right? Yeah, and
yeah,
again, just as I spoke about the hype cycle, I think eventually this will pass because AI is going to be everywhere, and then you will not sort
yeah.
of just put your money into AI. You will put into AI applications, which is not called AI anymore. But that's not exactly where we are at the moment.
Yeah, exactly. I believe the same. Okay, right now this is one of my favorite parts of the podcast regarding the marketing side, because this is
Mhm.
also where what I do. So everyone knows that in every business, marketing is a crucial part. I
Mhm.
believe that especially in software as a service businesses or service businesses in general. So I'm really eager to take your take on this. So how do people find out about the companies that you invested in? So what are their marketing strategies?
Yeah, that's a very good question. And there, I need to sort of talk about the spectrum of companies I'm in
Yeah,
because
yeah,
on one end, I'm in sort of SMB SaaS. That means
yeah,
that we have a lot of smaller customers, right?
yeah.
Still businesses, but a lot of small customers. And then in the other end, I'm in enterprise, SaaS, where you have
Hmm.
fewer but larger clients, right? And also
Yeah,
sort of my message about marketing and sales is rather different, right?
yeah,
I would say the majority of my portfolio, I would say, see marketing as supporting sales and not the other way around. And that's because
all right.
eventually it's still very outbound what is going on. Of course, you need to do brand building, you need to do a lead generation using
Yeah,
online marketing mechanisms, etc. But actually closing deals is not related to marketing. Lead generation is, but from the point where you have a qualified lead and then to closing, that's their sales is a lot more important than marketing, if you understand what I
yeah,
mean. Whereas
yeah,
in the S&P business, it's the other way around, right? Because there
yeah,
you really look at inbound and you try to convert with as few hours involved as possible.
yeah.
So
Hmm.
it's hard to just say one thing. I would say it
Hmm.
depends on where in the market your size of your customers. I would say.
Okay, so what would you say the best strategies for SaaSes that are targeting maybe smaller to medium firms, and what are the best strategies for SaaSes that are targeting enterprise?
Yeah. So if we stay in the SMB, I'm not a marketing expert, I have to admit, but I would say
Yeah,
there you really need to focus on your marketing tech stack, and you need to make sure that you are extremely efficient in identifying qualified leads and how to do targeted messaging towards each group
yeah.
of qualified leads. There are lots of tools for that, but you should do another podcast with another person because I'm not really the expert in that area. But I can just
Yeah.
see that where it works, it's really quite efficient, and they have very nice conversion rates there, right?
Hmm.
Whereas in the enterprise for large companies, selling to large companies, I mean, I could tell the same story about creating leads and qualifying them. But there I would say that really, really understanding your sales execution process is the key, right? You need to
Hmm.
understand all the stakeholders. You need to understand, how to
Yeah.
old-fashioned sales. How do I answer these 10 reservations they might have in order to enter a cooperation with us, etc.
Hmm.
It's a lot more about traditional sales skills, I would say. Even
Hmm.
though, of course, you need to do it in a 2025 technical
Yeah.
setting, of course.
Yeah. Of course, you have to adapt to the year and the technology you're in.
Yeah, but when I say outbound, like 10 years ago, that meant that you would, take your phone and
Yeah.
call all the time. That's not how you do today, but it's still outbound because you have your target list and you know whom you want to talk to, right? Whereas
Yeah.
in the SMB business, typically it's inbound. So, you will shout out with your megaphone and then somebody will listen to you
Yeah.
and come to you, right? So
Yeah.
it is two
Exactly.
very different processes.
Yeah. Of course. Of course. In your experience, how easy it is to find and retain actually high quality marketing team members?
I would say if I look across the different staff categories I look at, then I would say in general marketing is not the most difficult, right?
Okay.
Actually, now I'm speaking a lot about sort of the labor marketing, Denmark and the
Yeah.
UK and Spain and Germany. I think there are when you do a job ad, you would have a lot of applications if it's sort of general purpose marketing, right? Whereas if you
Okay.
do job ads in other categories, you basically not get anything because it's very rare. But
Okay.
there's a big difference between the average marketing person and then those who really understand online marketing and who have a track record. They are extremely difficult to get around, and I mean very expensive people.
Okay. What do you think this um it differentiates between the two?
Sorry, I didn't understand that question.
What do you think the guy that knows a little bit of marketing? What's the difference between him and the guy that you said that are very expensive and
Ah, yeah.
hard to find?
So if you look at sort of the marketing team, even though it always starts with one person and then it becomes two or three, right?
Yeah,
Then you
exactly.
need a content expert, a person who can actually write good content and make sure it gets to the right audience. But then you need and this is what I think is a really limited resource. Then you need the person who really understand the marketing tech stack and have seen a marketing tech stack used in a company who has success in this, right? Has been
Okay.
with one or more companies who have actually cracked the online marketing challenge, right?
Yeah.
These people are hard to get, I would say. It's a lot
Mhm.
easier to get the content people and of course all the marketing coordinators, etc. is very
Yeah.
is not the tricky one. But this marketing tech stack guy or girl, I think is a really hard catch.
Okay. Maybe for the audience that doesn't know what I mean, they probably know, but if they don't know what a marketing stack is, can you explain that to them?
Yeah, so a marketing tech stacks, that's all the tools you use for marketing, like HubSpot and LinkedIn. I mean, all the social media thing is one thing, but then
Yeah.
also the tools you use for marketing automation, I forgot the names about it, but there is a
Like
suite of
differently
tools
follow.
which you need to understand and you need to use in order really to get to the point where you can automate this and you can
Hmm.
measure this. I mean, a lot of people have used one or two of them, but I mean, those who have seen the suite in action or the stack in action where it works, I think that's very, very valuable to take into your startup or scale up. And these people are unfortunately also very, very expensive because they are, there's not a lot of them. That's the point.
Hmm.
Does that make
Okay.
sense?
Yeah, of course. I
Mm,
mean, I
yeah,
know what
yeah.
a marketing tech stack is, but I
Mm,
mean, of course, I would be. It would be funny for me to not know what a marketing stack is.
mm,
But maybe for
mm,
the people that are at home and they're watching, maybe they don't
mm.
know. So, I want to make everything clear for them as well.
Of course.
But now I think I have a very interesting question. I mean, especially for you that you're an investor in 10 companies.
Mm.
How are you currently spending your day regarding, the business, the professional side of things?
Yeah, that's a good question. As I told you, so it
Yeah.
changes a lot. Right now, I'm spending half my time being part of day-to-day management in one company, and that's because the CEO is sort of have had an accident, so I have to step in, and I'm not the CEO, but I'm sort of
Yeah.
trying to compensate for the lack of that. But I think in a more ordinary week, I would say I would spend time with maybe half of the companies I've invested in. Typically meetings where we discuss strategy execution of some kind. Many of these companies are exploring how to get to other markets than their local market as part of their growth strategy. So we have a lot
Okay.
of sessions about, if you're a Danish company, what's the good and what's the bad about moving into Germany? Should you pick when you are in a small company like Denmark, you always have an ambition to hit one of the large countries in Europe. Should you take the
Yeah.
UK, or should you take France, or should you take Germany, or should you take Poland? That's and there is no single answer to that. So you really need
Mhm.
to get into how the company operates, how their market is.
Okay.
One country, it can be a free market where there's easy access, and in other countries, the same market can be regulated in such a way that is extremely difficult for a foreigner to get in, etc. So that's a lot of what I do, and then I spend a lot of time interviewing salespeople, helping with the recruitment, trying to set up something which can beat a predictable sales and marketing process. So that's what I spend, I would say, the majority of
Okay.
my time in.
Okay.
Yeah.
And also doing podcasts, right?
No, I do that very rarely, but it's fun.
Okay. Okay. I love that. I think you've already answered my next question, which would be, what are the most important metrics for you at the moment?
Yeah. And again, this is across my portfolio, and it will differ
Yeah.
if you go into each, but I would sort of take out three metrics which I think any scale up in software needs to monitor closely and perform on. And the first one we talked about before, that's the growth in recurring revenue, right? The MRR or ARR growth. That's
Yeah.
very, very important. The rule of thumb is that when you are small, you need to grow fast in percentage, and then as you become bigger, it's acceptable to have a slower percentage because the numbers are
Yeah.
bigger.
Yeah.
But I would say sort of the threshold is that you need to keep your growth higher than 30% all the way up, I would say. And when you're very small, you should probably try to double ARR yearly, sort of the first 1, 2, 3 years. So that's the king number, I would say, in SaaS. That's the growth in MRR, and that's net MRR, right? So when I say net MRR, you have MRR is typically composed out of four things. There's MRR coming from new clients, MRR coming from expanding existing clients. Then you subtract MRR, which contract when existing clients become smaller, and then you subtract MRR from churning customers, right? So the net
Mhm.
MRR is basically that equation, right? And it's that number that have to grow, and that is the number being monitored, right? So if you have high churn, then you need to be very, very aggressive on sales, both new biz sales and expansion sales. So that's the first number. The second number, and the I would say the larger customers you target, the more important is this number. That's what called the net retention rate. And that's basically, well, you could also talk about the churn rate. So the churn rate will have
Yeah.
to be very low. The net retention rate should be very high. And you differ between what is called logo churn and money churn. And I'm very focused on the money churn number because in my part of the business, or you say in the SMB part of the business, you should typically look at a churn rate which is less than 2% per month. I would say is a good number to focus on. I mean, a lot of companies do better than that, but I think if
Yeah.
you get beyond 2% per month, then it's really, really difficult to make a growth business, right? Whereas if in the higher end of the market, you should focus on actually having what is called negative money churn or net retention rates above 100%. Basically saying that the MRR you lose on churning customers should be compensated by the MRR you gain from selling more to existing customers. I don't know whether that makes sense,
Mm.
but that's kind of
Yeah.
so what you
It is.
typically say, so NRR on 100%, that's good. NRR on 110%, that's great. And NRR above 120%, that's world class. So that's where you should aim, right? If you have an
Yeah.
NRR net retention rate below 100%, then you should focus on getting it higher. That's basically what you should focus on in your business, right?
Okay.
And then the third KPI, which we have not talked about before, and that's I also need to explain, that's due to the fact that I am mostly into companies who grow at least semi-organically. So I'm not into a lot of unicorn chasers with
Yeah.
many millions of dollars in venture capital. And that's where if you're not into that and you don't have unlimited amounts of money to spend, then you will really, really focus on this one. And that is a KPI called the time to recover your customer acquisition cost, time to recover CAC, because
Yeah.
that's basically telling you, let's say a good number would be your time to recover CAC is less than 9 months, right? So
Yeah.
so if you acquire a new customer, then the customer has paid the bill in less than 9 months. And in most of my companies, you can work in such a way that you actually that you invoice 12 months ahead. And then if you have
Yeah.
a time to recover CAC that is less than 12 months, but especially less than 9 months, then it's cash flow positive all the way, right? So when you
Yeah.
acquire a new customer, you get 12 months up front, and it takes you 9 months to get to a state where the bill has been paid, so to speak, and then it's profit
Yeah.
from there, right? So I think
Yeah.
that's a really, really important KPI to work with if you are not fully loaded with venture capital, right? So, and even if you are, I think it's still a good number to to look at.
Yeah, very interesting answer. Now regarding goals, it's a really a trick question for you, I think, because as of an
Mm.
investor. But what are your goals in the next 12 and 24 months? Maybe it's, I don't know, to hit with the portfolio a certain revenue or a certain KPI or a certain percentage of whatever.
Yes.
Can you
So
walk us through
I can also try to generalize that. So
that?
in almost all the companies I've invested, the time horizon for being ready to exit is typically 3 to 5 years, right? It's not that we
Yeah,
we always get there, but that's the aim in basically all the companies I work with, right? And that also gives some indication. So first of all, these SaaS KPIs need to look right all the way through, right? So if you're not satisfying the rule of 40%, then you need to have a plan for how to get to satisfy the rule of 40%,
yeah. Okay.
and the other SaaS KPIs also. But then on top of that, there's another number which is really, really important. And that number is that your revenue, or more specifically, your ARR, need to get above a certain number in order to open up the acquirer market, so to speak.
Okay. Okay.
And that number historically has been very, very high. Normally, you would say you need to get to 10 million US dollars in revenue before the private equity financial investors will start looking at your company. But software as a service have taken that number down significantly. So in my experience, what you really need to aim for is to get above, now I need to translate into dollars, above 3 to 5 million US dollars, preferably in ARR, but at least in total revenue. If you get above that number, then you will experience that the number of potential buyers becomes significantly larger. So that's
Okay.
always a number we look at, is that we need to get to a certain size also in this 3 to 5 year period, right? And many
Yeah.
of the companies are way above that number, so that's not a problem. In companies, typically companies who are approaching small markets, you need to really focus on how do we get beyond that threshold. And then, of course, you also need to have a plan for getting to markets that are significantly larger, because I mean, if it is
Mm-hmm.
flattening out on 3 or 4 million US dollars, then the growth potential is much too limited to be interesting for financial
Yeah.
investors.
Yeah. It's very, very interesting. I mean,
Right?
every answer you give, it's very interesting, and I think it's very, very insightful for the people that are watching, that
Hmm.
may want to start a SaaS or they may want to invest in a SaaS.
Hmm.
Now, right now, it comes one of the most interesting question. At least for me, I think is one of the most interesting ones. So, if you had right now a magic wand that you could wave to solve one thing, what that one thing be and why?
Yeah. Uh, yeah, and that's a very, how should I say it? Maybe it's a very, very Danish answer, but I'll try to give it to you anyway.
Okay.
I think it would be really, really nice if the EU market was one market and not 27 different markets. Now you're asking for things which is
Yeah.
not real, but if they were real,
Yeah.
it was a lot easier. I think the big, big difference between doing SaaS scale-ups in Europe relative to the US is the fact that in Europe, actually Europe is a lot larger market-wise than the US, but the problem is it's not one market. It's a lot of different markets. We have, I don't need to repeat. We have different languages, we have different
Yeah.
currencies, we have different cultures, etc., 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 which just makes it much more complicated to get, to conquer the European market. And coming from a
Yeah.
small country with 6 million inhabitants, this is very real because you soon run out of markets in Denmark. You need to get to
Yeah.
other markets. Then you go to other Scandinavian countries. Then you try to hit Germany, etc. And you find out that it's very, very different from Denmark. But you learn to live with it. But I mean, the advantage of having 300 million people speaking the same language, having the same currency, should not be underestimated. And we don't have that in Europe, unfortunately.
Yeah.
Mhm.
I mean, US is a really big market, but also a saturated market. So
Mm.
yeah, from any point of view, in my opinion, to be honest.
Yeah, and as we speak, I think that having the US market as a strategy right now, I think that's a tricky one. It could be very much uphill in the next coming
Yeah.
years, at least the next 3 years until they get a new government over there.
Yeah. I think we'll see. We should do a
Mm.
podcast in like 3 or 4 years to recap on that.
Yeah.
So yeah.
Yes.
Okay, I have two more questions.
Mhm.
First one is, and I think you've answered it as well previously. What is right now your biggest frustration and why?
Again, try to speak generically. I would say, I think on average, I would like higher growth rates on ARR, and I think it's an evergreen frustration because I'll probably never not be frustrated about that. So I have companies where it's really looking good. So that's not the companies I'm talking about, but companies where you grow too slowly and you spend a lot of energy trying to figure out whether it's the market you're in, whether it's the competitive situation, whether it's the team you have, or what is the reason why. Again, there's never one reason. It's always very specific to the company or the market the company is in. But
Yeah.
that's a place where a lot of energy is spent, and not always good solutions are found short term.
Okay. Yeah, this totally makes sense. Now the last question would be, I mean, maybe if you want to leave a thought or an idea that might help the viewers, here is your chance. This is the last question.
So if you are wondering whether you should get into the SaaS business or not, then you will find people who will tell you that SaaS is over in 5 years. Now it's, the pendulum is now going the other way because it has now been going the SaaS way for 10, 15 years. I think my message is that there is so much inherent advantage in working with subscription models, not only as a vendor, but especially for the customers, that I would not hesitate moving into that business at all, even though times are looking different now than they did 5 years ago. So I think that would be my one message. And my second message would be keep up with AI and what it can do to your business wherever you are. It's not for fun, it's serious, and it's going to shake up much more than we think right now. So you simply need to get into that, whether you want it or not.
Thank you very
Mhm.
much for the answer, and
Mhm.
thank you very much for being here.
Mhm.
I was Bogdan. I was here with Mogens. I think we did a very interesting podcast. And I will see you guys in the next episode.
Bye bye.